Hey everyone, so with the world on edge as a threat of a Russian invasion of Ukraine looms near, there is a massive potential with defense industry investments. Large defense companies such as Lockheed Martin, Northrop, and Raytheon all have a history of big return during times of war. Today, I'm going to present you with a company that would stand to benefit greatly from conflict abroad, that provides services to the US government, that checks all the boxes of a 100-bagger stock, and that is cheap. Ladies and gentlemen, today we are talking about Vectrus. So what is Vectrus? Vectrus, or stock ticker VEC, is a defense technology company that provides services to the US government. The company provides various services including facility and base operations, supply chain and logistics services, mission support, and engineering and digital integration services. They actively support the Army, Air Force, Navy, and Marines throughout the world with services such as aviation maintenance, equipment maintenance, and asset management. Their information technology services include communications, cybersecurity, and network systems. So just days ago, Vectrus received a $250 million task order from the United States Army to perform logistics support that extends their services to this branch through 2026. At the beginning of February, Vectrus announced the expansion of its Converged Environment Service offering, which, quote, designs and implements integrated technology solutions to address installation management challenges faced by the Department of Defense. In layman's terms, the goal of this is to improvise performance and reduce costs with everything IT related. It's a well-known fact that much of our military base operations are carried out on aging infrastructure technology, which is oftentimes unable to fulfill the goals of the DoD when it comes to modernization of their military base operations. As the main contractor for the naval base Coronado in San Diego, Vectrus is already implementing this approach to create smart warehouses that aim to improve efficiency, accuracy, security, and safety of materials across all stages leading up to distribution. Now let's take a closer look at why I think Vectrus has the potential to return 100 times your money. Let's first look at its market cap. Vectrus currently has a market cap of $510 million. To become a 100-bagger, it would have to reach a market cap of $51 billion. Companies in that range include AIG, Vodafone, and Hoya. If you recall from my previous video on how to find a 100-bagger, which I'm providing in a link above, we first need to look for a company with a small market cap, preferably under $1 billion, as a larger company has less likelihood to return 100 times as compared with a smaller company. Next, let's take a look at institutional ownership, and here we can see that it is just under 90%. I love seeing high institutional ownership, especially when it comes to companies that I'm investing in long term. What it shows me is that the higher the number, the greater the faith of big institutions, and this says a lot, especially since these same institutions are hiring very costly teams to do extensive research into the company. Next, we'll look at the number of outstanding shares, and we can see that this number is 11.7 million. This is considered a low float stock, and we especially like to invest in companies that have less than 100 million outstanding shares. This is very powerful because a small number of shares available to be bought results in higher demand, which causes prices to rise. Consider Chipotle, that had 28 million outstanding shares and went from $40 in 2008 to a high of almost $1,900. So here we have a defense company that supplies the US government in a heightened time of global anxiety over the threat of a Russian invasion of Ukraine, as well as a small market cap, high institutional ownership, and a low float. Now, in the book 100 Baggers by Christopher Mayer, he takes a deep dive into companies that have returned 100 times your initial investment, as well as company traits that give a company the best odds to return 100 to 1. I summarize a lot of these principles in my video on how to find a 100-bagger. However, one of the most important concepts that he talks about is the twin engines of 100-baggerdom. These twin engines are high growth in earnings and a high multiple on these earnings. In 2018, we saw that total revenue was $1,279 million. Then in 2019, revenue jumped to $1,382 million. 2020 saw revenue further increase to $1,395 million. And in 2021, we saw that it jumped to $1,719 million. Looking at the PE ratio, we see that as 9.36, and this is a multiplier of how much the market is willing to pay for a company's earnings. A high PE ratio indicates that the market is willing to pay a high premium for these earnings. With more positive news surrounding the companies such as new contracts and the possibility of war, we could see increased willingness to pay a high premium for these earnings. And this here is the key to finding stocks that return $100 for every dollar invested. They must have the combination of high earnings growth and a high multiple on these earnings. Next, let's look at the weekly chart. Here we can see that Vectrus has been staying in an uptrend pretty much since its inception. Recently, price has come off of its high at around $60 and is currently sitting at around $44. Also, take a look at this red line here. This functions as the 200 EMA, which acts as a very strong support line. In the past, price has hit this line and bounced off, offering massive returns. Currently, price is sitting right above the 200 EMA. What an amazing buying opportunity. I've started my position here and not only have shares, but also have call options with a year expiration date as well. If this is a company that you'd like to consider investing in, I highly recommend starting a position here and averaging down if the price decides to fall a little bit more. What I mean by averaging down is make sure not to enter a position with all of your money, rather save some money on the side so that you can average down your buy-in price if the price of the stock falls some more. Vectrus has the makings of a 100-bagger. It has a low float with no plans to split, which means that as supply for shares decreases, price will increase. It's also a small cap stock with an institutional ownership above 60%. With their military connection and a potential catalyst of unrest between Russia and Ukraine, they are primed for what should be rapid growth in earnings over the next several years. If the market decides it wants to pay a higher premium for these earnings, we could see stock prices of Vectrus rocket over the next decade. Guys, we're looking at a perfect setup, and with its current price point, now is an amazing opportunity to begin scaling into a long-term position. Like I said before, I'm buying shares on long calls of this company and not touching them. In fact, I'm buying most of my shares in my Roth IRA since I can't withdraw this money without a penalty until I'm 60, which further incentivizes me not to touch my shares. If you don't buy Vectrus, I won't be offended, but hopefully you take the same approach, diving into the business model, researching acquisitions, participating in earnings calls, looking up key financials, charting when looking for your own 100-bagger. Let me know what you think of Vectrus. Are you a buyer too? Let me know down in the comments below. And if you haven't done so already, please like and subscribe to the channel as it helps me to bring more content like this to you. Also, don't forget to hit that notification bell so you don't miss out on any videos like this. Anyways, I look forward to seeing you all next week, and happy investing. Peace.